Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, June 20th. I want to take just a brief minute to discuss what markets did last week as the S&P 500 continued to be the only game in town going higher, with the market up 1.58% on the S&P 500, with the mid-cap index down 87 basis points or down 0.87%. And the small cap index, as measured by the S&P 600, was the laggard on the week, down 1.80%. And as we talked about last week, and we've been talking about, we did get the CPI and inflation reports. This week we got a retail sales report where the numbers were negative, and that has increased the volatility of individual names within the equity market. Now, if you were to just turn on CNBC or go to Yahoo Finance and look at the S&P 500 itself, you'd say things are great. The S&P's up over 14% year to date. That's fantastic. But when you peel the onion back a layer or two and you look at the other, you take the Magnificent Seven, you look at the other 493 stocks, they're really not performing all that well compared to their peers. And that is because investors are kind of sensing and fearing a slowdown, and that the Fed is going to be too late in reacting to cut interest rates this year. And so with the retail sales number being negative for the month of May, that's adding thesis to that statement. But the Fed has come out this week and reiterated its point that it wants to remain patient and wants to receive more data. The flaw that we see with that is that you're looking at, as the Fed, you're looking at 3-month-old average data, when the reality is this world moves very quickly, and the data that's happening in real time would be more applicable and helpful for what they're looking to and trying to accomplish. So what we've seen is an increase in the volatility that we talked about, the equal weight S&P 500. So if you take every stock and there was no market cap weighting, so Nvidia didn't take up a huge portion of the S&P 500. And the Magnificent Seven, just to give you an idea, makes up over 25% of whatever the S&P 500 does on that particular day. So as they continue to move higher, the index can continue to move higher while the other stocks are left behind. So what you've seen in the month of June is a negative divergence between the equal weight S&P and the S&P 500, where you've seen them be closer, and now you're seeing this go up and this come down as it's going down. The equal weight is going down while the 500 or the S&P is going up. So what do you do in an environment like this? Well, this is the time where you take and evaluate your portfolio. And what you do is you take a look at your laggards that are severely lagging and that don't have any prospects of moving higher, and you move on. Sometimes it's easier to move forward. Subtraction is easier than adding to names that you think may go higher. But identifying the losers and subtracting them is easier than identifying potentially your winners. The other thing to look at doing is, if you have strong positions that have big gains in them, it's good, prudent portfolio management and discipline to take a little bit off of those and put it in cash for right now. Sell your laggards, move that money to cash. Sell your winners and put not all of that. So when it comes to selling your winners, don't sell your whole position, but sell some of the profit that you've made so you can lock in some of those gains. Hold that money in cash. Identify some names that you'd like to buy that maybe are too expensive right now, and wait for it to fall down to a price that's more palatable for you to take, as we believe there's going to be plenty of those opportunities throughout the summer and throughout the election season coming up. The third quarter of the year is typically the most volatile quarter in the equity markets, and that's the quarter of July through October. And we're ending June right now, believe it or not, heading towards July. So it's always a good thing to have some cash on the sidelines to be prepared for that. So be prepared for additional volatility as we move through the summer into election season. And if you have questions on how to navigate that, or would love some help on how to do that, feel free to give us a call. We'd love the opportunity to help you. You can reach us at 904-346-3460. Or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.